Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, I wanted to look at the whole question of the performance of the international markets, in particular, the equity and bond markets, the equity markets by region, and the bond market in terms of investment grade as well as high yield bonds. How does that benefit you, and how have you performed during the year with your US dollar or hard currency investments? We take a look as we take stock now as we come to the end of the year, in this final month of the year, what has been happening. And then I'll speak a bit about what you can do and how you can participate further in this market. Let me start by saying there is some $3.5 billion of US dollars in our local banking system. And also there's about $1.5 billion US dollars in the mutual fund space. Let's see how these overall have performed relative to the market outside, and then we can talk about certain prescriptions in going forward. Let's look first of all at what's happening in the major regional markets of the world. And the first graph sets out to show you what has been happening in key areas. So when you look at the green line, that is the US market. And when you look at the reddish line, that is the European market. Then the blue line is Asia, and the yellow line is Latin America. So let's look at these and see what has been happening. All markets in these major regions have been down. As you can see, Latin America down 7%, Europe 12.8%, year to date, meaning as at the 30th of November. The Asian market down 39.9%. And the US market is just up about 2.5%. As you can see, when you look from the beginning of the year going forward, what has been happening, what can you see? You can see volatility. Let's go back to that particular graph. You can see extreme volatility in the market. We're trying to get back to that first graph. And that volatility, when you go to back to that first graph, that volatility has provided negative returns on the most part right across the world, except for the US in the equity markets, where, as you can see, the market was up for a while and down for some time. So let's look now next at what has been happening in the Asian region. We look in particular at the Indian market. In the Asian region, what has happened? Well, in the Asian region, you have found that, as I said, the market has been down. But when we look at some of the particular areas, China, for example, is down 27% in US dollar terms. And India, where we have investments through the Save Invest India Asia Fund, that market is also down. When you look in US dollar terms, down 7.7%. So whereas last year you had a 40% increase in valuation using the BSE, the India Bombay Stock Exchange Index, you are seeing now that the market is down 7.7%. The outlook for India is solid because it is the fastest growing of the major industrialized countries, 7.4 in 2019, and estimated to go up to 7.9 in 2020. This would have an impact we expect in bringing the market up again. Let's go then to our next graph and look at another region, which is the LATAM region, the Latin American region. Down 7% or thereabouts, and the 800-pound gorilla in the room is, of course, Brazil. When you look at Brazil and you look at the equity market versus in US dollar terms, the equity market is just about flat in the Brazil region, and we have our Brazil Latin Fund in that area. As you can see, up in the first part of the year, and then trending downwards with political tensions, political elections for the president, all of those factors having a very serious impact. Let's turn now to our next outlook. And as you can see, we talk about the bond market, what has been happening with the bond market. So last year, the investment grade provided total returns of 7.2%, and the high yield bonds would have provided returns of about 7.9%. Not so in this year, 2018, where you will see both bond structures, emerging market investment grade, down 7.2%, and the high emerging market high yield down 5.8%. So there has been some deterioration in terms of valuations in these markets. But let's be clear, there will be down years and there will be up years, and one swallow doth not a summer make. And so investors have to look over a medium term, while I would say laddering their investments to meet their liquidity needs, having some funds short term. But those short-term funds do not generate the kinds of returns or the higher level of returns generally that you would see. What do you do? But before we do, let's look at what has been happening over the past 5 years in the various areas that I have spoken about. First of all, if you had your money in a bank, $10,000 5 years ago, you would have about $10,050 now. If you have your money in TT equities, the composite index in Trinidad and Tobago, in this purple line, you would see $10,000 would only take you to 10,221. In the US money market, our money market funds, you would be 10,709. In the US emerging market bonds, what you would see, a return from 10,000 to 12,125. And the world equity market still outperforms over the 5-year time. If you put 1,000 in using 5 years and using a representative indices, you would have been the highest up at $13.5 million. Now, there is a story to that. The story is this. You need to invest longer out, diversify, be more on medium term, and consider what your liquidity needs are so you keep positions short but having higher positions in the core investable assets of investments and bonds. And you can participate, whether you have a small amount or a large amount, you can participate through mutual funds. We have a range of mutual funds, the Bourse and Save Invest mutual funds, and you have other providers in the market. Talk to us about your investment needs, your outlook. Things are happening when there's a movement towards US dollars. The Sagicor deal is about giving you US dollars for your TT-denominated holdings in Sagicor on this market. The Guardian Holdings potential takeover has been cleared to go forward, and it is expected, based on the reports, that you will be getting $2.65 as part of the settlement. The First Caribbean, which was supposed to be listed on the New York Stock Exchange and has been pulled back, would have given you US dollar access. How best to use your US dollars and make it work harder for you? One thing you know, it doesn't make too much sense to have it in the bank with the lowest yield in a medium-term outlook. Have yourself a wonderful investment week. Call us at Bourse 226 or 2Bourse. Look for us, reach out to us at bourseinvestment.com so that we can give you more clinical advice to meet your specific, tailored to your specific needs. This is Subhas Ramkhelawan for the Bourse Report.